At the moment, we can see opportunities across the small, mid and large cap space actually, and it's interesting over time when we look back at where the performance has come from, it's actually been pretty evenly spaced. If we go back, say last year and early this year, in the large cap space, something like AGL did very well for us. More recently, Lendlease has done well, and clearly Facebook is a huge company, and that's done well for us also. In the mid cap space, Iris is something which we continue to track closely, and the likes of say ResMed also is one which we follow closely as well. In the small cap space, we were early in some of the small lithium names last year, and more recently Mineral Resources as well has been a fantastic stock that I think the market is underappreciated in terms of its leverage to both the lithium theme, but also just the bottom-up quality of management that are operating that business, and the ability to take cost out of that business also to drive earnings, which we like. I think with the Australian market it's going to be quite stock specific, which is great for fundamental investors like us. Historically it's been either a resources commodity price-led sort of boom. More recently it's been that transition towards housing and infrastructure. But I think today when we look across the market, a company say something like Costa Group, which is in that, I guess, an agriculture space, but they've got tremendous IP in blueberries, for example, and that's got a fantastic growth profile and demand profile, and good growth options in Morocco and Asia as well. So that's something which, from a stock-specific level, we really like. Increasingly, given the high cost of energy, manufacturing is going to be difficult. When we look at the retail landscape, again, it's difficult with the influx of online and Amazon now as well. So that's a space which we've played in less, and where we do play in that, it's specific, such as someone like Premier Investments, where the Smiggle brand is doing really well in the UK. So really, it is stock specific as opposed to a particular theme, I think, going forward today. There's definitely some really interesting small Aussie sort of tech companies. Afterpay is one which is doing some really sort of innovative work on the payment space. They're not cutting out the banks per se, because you still need a credit card or a bank account to pay. They're just acting as a middleman, so to speak. So that's an interesting sort of company which has got tremendous growth. The question will be around, for Afterpay, will be around how far can that go, and how do you actually look at the sort of credit cycle, the bad debt cycle, because we haven't really seen that aspect yet. In terms of other tech companies, there's a bunch of companies such as REA, which continue to do a really good job in the sort of online real estate space, and same with Seek as well. And Seek and REA are two companies where they continue to invest into the core business, but also direct some of their funds towards their offshore sort of ventures as well. But they're both companies which have got excellent pricing power in terms of their market position, particularly with REA.